This is Perry Thomas. As you know, I'm the growth coach. Okay, so we talked about what's going to happen when we get their credit rebuilt, and now they're getting closer to those high numbers. What happens next, that part of the journey that takes them to the mortgage side? Explain that detail to us.
Okay, well, once they get their credit at least to a 620, I go ahead and evaluate the credit and just look to see if they have anything they need to do to help them get closer to that mortgage process. I give them the guidance on what they need to do, give them the documents they need to get qualified for the home. Once they get their documents in, I verify the documents, and then if they're, if everything matches up, then we go ahead and send them over a pre-approval letter.
Okay, so you're still kind of guiding them along, because even though their credit now has been recovered in essence, they still have to maintain some of that discipline that Tammy taught them.
Yes.
And you're still going to now follow up, so it's kind of a tag team at that point.
Yes,
Is that right? And then the documents themselves, if they don't understand what they are, don't know how to get them, how can you help them get those documents?
Well, I can definitely give them guidance on where to get those documents from. It's basically like your basic documents, such as 2 years of tax returns, 2 years of W-2s,
Okay.
1 month of pay stub. If they're self-employed, then at least they're licensed for their self-employment.
Okay.
And 2 months of bank statements.
Okay.
So it's the basic financial documents that they should have access to. But if they don't have access to it or don't know where to get those, I can definitely guide them.
You can still help them and so
Yeah.
forth. And what about timing? Because you mentioned 2 months of this and 3 months of that and so forth. What if they're looking to have a home built? Or if Tammy tells them, okay, you're going to be ready in 6 months. So how does that work? Do you then time it?
No, well, we'll still need the initial documents to start off the pre-approval process, just to
Okay.
get them qualified.
Okay.
And then throughout the process, we'll request more additional documents. W-2s, tax returns, that's for 2 years. That's 1 year's return. You don't need,
Gotcha.
additional
Okay.
documents. But bank statements and pay stubs, we will ask for more updated ones.
And then they will know, am I correct, that they'll have a good feeling for what they can afford to buy.
Yeah.
So you're going to be able to kind of go backwards, if you will. You're going to say, based upon what I'm seeing, you can afford to buy a home at such and such price. Is that correct?
Yes.
Okay.
Once you get those documents, that's when you do the DTI.
What's the DTI for those of us who don't
Their
know?
debt to
Debt to income ratio.
Yes,
Okay.
debt to income
And
ratio.
that tells them what they qualify for. Okay.
Yes.
Kind of a passport to purchase, you might say.
Yeah.
Okay. And then how do they know? Because if I'm a consumer and you tell me I can afford a $150,000 home, I don't know what that means to me. Can you put that in terms like a monthly payment?
Well, it kind of depends. It's a lot of things that that varies for a monthly payment. It's a lot of different variables, such as your mortgage insurance. The mortgage insurance is based off of the loan type. FHA is 0.85%. USDA is 0.35%. So that's if you put down less than 20%, you automatically have mortgage insurance, including your monthly payment.
Okay.
And then you have interest rate, and that depends on your credit score.
Certainly.
And then you have your insurance on your home, and that kind of depends on your insurance credit score.
Okay.
So whatever whatever your rate for the insurance, that depends on that homeowner's insurance.
And let's be honest. Everybody listening doesn't understand all of
Yeah.
that. That's why they need you, correct?
Yeah, and we can guide you
here.
through that.
100%.
Yeah, and then we have insurance agents on our team as well that can help us get you the best insurance premium possible,
Perfect.
the lowest rate for the cost that you need for your home.
So you have other people in your network that can help them achieve those goals because they don't know who to call.
Yeah,
And that's usually the case, especially with the person that's buying that first home. It's a scary transaction.
Yeah.
They don't know they know they don't want to pay rent. They've heard from their parents and their grandparents about taxes and so forth. They don't understand it, but you two ladies do.
Yes.
And we definitely want to take the load off
Yes, definitely.
Perfect.
and make it easy.
And then you also have taxes as well. Taxes can vary.
It varies by the county, the
Yeah,
city.
by the county, the city,
Okay.
the property. So that can make a big difference with your mortgage payment. So it's kind of hard to say $150,000 how much your mortgage is going to be because you have homeowners insurance, taxes.
Too many variables.
It's too many variables. It
Okay.
depends on where you stay and all those other options.
Okay, and am I correct also that they don't need to go find a home first and then come to y'all?
No.
And why? Because that's what most of them do.
Please don't do
Why
that.
is that a problem?
because that's going to put them in an awkward position, because what if you're not qualified
Yeah,
right
they're
away for
fantasizing
their
at this point.
Exactly.
property
I
right
want
away?
this house and it's like 300, but they
Yeah.
income only allow them to get 150.
Right, and we've had a lot of situations
I'm sure
like
you
that.
have.
And sometimes we're able to clean it up and meet their deadline, but in some cases you can't get that house right now because you're not ready.
Don't
We
set
actually
yourself
dealing
up for
with somebody.
disappointment.
Yeah, we actually have a client like that right
It probably
now.
happens every day, I would bet.
Yeah, it
So
does.
your recommendation is they call you first.
Yes.
They get everything cleaned up. You're going to give them a timeline to know when they can purchase that home.
Yes, we are the first step, the loan originator. So
Exactly.
we originate the loan, and then we can connect you to your realtor or other, homes or whatever you need. We're the
And
first
that's
step.
the key, is that you have a network. So you have a realtor group that
Mhm.
you are associated with that we have already established here in the
Yes.
Baton Rouge area.
Mhm.
And we'll talk more about them on another video. But the
Mhm.
idea is this. They come to you, you get them a credit cleaned up, you get their mortgage approved, you
Mhm.
give them a pre-approval letter, and then you refer them to a realtor that knows the market. We're
Yeah.
going to ask them, where do your kids go to school? Where do you go to
Yeah.
church? Where
Right.
do your parents live?
Yeah.
Where does your network live and so forth?
Yeah.
And then we're going to find them a home in that area. Whether it's new or used,
Mhm.
makes no difference to us.
Right.
You can take them from point A to point B.
Yes.
And-
I like to think of myself as a mediator. I'm the one who connects them with everyone: the appraisal, the homeowner's insurance, the title company,
That's
the
perfect.
realtor, everyone. I'm definitely here to help guide our clients.
So you are the glue that keeps it together. And you
Yes.
mentioned earlier you're a psychiatrist.
Yes, in some
You have
She's
cases.
not
to be.
alone. I'm a psychiatrist too.
Yes.
Absolutely, you have to.
Yes.
This is a very emotional decision
It
for these people
is.
to make.
It is. And it's a big, a lot of people are scared when they get into this. So I like to hold their hand and guide them through it. But it's very important for them to follow directions, because if you're not following directions, you're making it harder for yourself and for me as well.
I just want to piggyback on that for a minute.
Certainly.
When they leave the credit side, they're already frazzled because they didn't went through this credit program.
Yeah.
Yes, exactly.
So when I ship them to Jess, their expectations are so high. Like, I'm ready to get my house. Not necessarily,
That's right.
but you still
You're
got hurdles
closer.
to jump.
You're a
Yeah.
step closer.
Yes. Yes.
But
Yeah.
you got work to do.
You
Yeah.
have work to. You have more work to do.
Yeah.
The credit was
but
just
if you
a little
never,
bit.
Mhm.
if you had never started with you in the beginning to clean up that credit, you couldn't change freeways and go to the mortgage side.
No.
Because you can't help them without a certain level of
No.
credit.
You have to start with
You
the
have to
credit.
start.
Yeah, you have to pass
Yeah.
that baton, and that's
Mhm.
good.
Yeah.
Okay. Well, good. Well, so what would you suggest when someone they clean up their credit? We talked earlier about the 3 things that Tammy does with them. What is it that you would suggest they could do to put things in motion today, to find out how they can start looking for a home?
Okay, I would say the main 3 things to get qualified for a home is, of course, the credit. You need your credit score to be at least a 620 or above.
Okay.
And of course, it's details in between all these 3 things.
Certainly.
But for the main point, the credit, your job history, you need at least a 2-year
2 years,
job
yeah.
history on
Okay.
your job. And then your DTI, the debt to income, has to be under at least 50% to qualify for a home.
But if
So-
they're not, if they don't know where they are, or they're afraid they're not, or they just started a new job, because I have heard this, if they change companies, but it's in the same industry.
Yes, and that's what I meant when it has details in between each one. The job history, you have to have a 2-year job history. It doesn't necessarily have to be on the same job.
Perfect.
It can be in the same field, and sometimes it doesn't have to be in the same field. As long as you show that 2-year history, that's fine.
So
And
you
it's
had-
consistent.
And it's
correct?
consistent.
So you
yeah.
have had a job for 2 years.
Yeah.
Not the same company, not the same store, not the
Mhm.
same retail job, whatever it is, but the
Yes.
same history.
Yes,
Okay,
yes.
so that's important because people change. I mean, let's face it, with what we just came out of over 2020, a lot of things
Yeah,
have changed.
right.
Wow.
And I know you said consistency. Consistency is a key point of having, your job history and everything. But if you don't have consistency, if you have a good loan officer like me,
There we go.
I can write a good letter of explanation if you have like an excruciating circumstance that happened in your life, such as 2020 COVID, someone passed away, or different situations happen with different people.
Absolutely.
So we can definitely explain the gap, as long as we can connect another 2-year history before that.
And let's face it, history is yesterday, but you got to start today. So
Yeah,
then
and you
can
still have to be
establish-
on your job for at least 30 days before you can qualify.
Okay,
The current
perfect.
job.
So you can start a new history. And that's what we're talking about is
Yeah.
new beginnings, new
Yeah.
opportunities, new home or a new used home, whichever
Mm-hmm.
it might be.
And to
Okay.
make them feel more comfortable, we're a broker firm.
Okay.
So we deal with like 15 lenders.
Yeah.
So
Okay.
we shop the deal for them. So we're going to get them the best rate.
You give them
Yeah.
plenty of options.
Right.
Because if they go to one lender, they're going to get that
Yeah.
rate that
Right.
it's not they're not shopping their rate.
Right.
We're shopping.
Right.
Okay, and one of the other things that most new home buyers fear is that down payment. They think, oh, I gotta have all these thousands of dollars. But the reality of it is, aren't there programs out there where they don't have to have a substantial, maybe even no down payment? Is that correct?
We do have programs out there, and different grants that's available for the clients, and we accept all grants.
Okay.
Now we do have USDA, which is known as a RD loan. That is no down payment.
No down payment.
required.
Okay.
So I that is my to go to. I would say I'm a specialist in the USDA
That's a good place
loans.
to be. That's a good specialist
Yes,
to be.
but it is a lot of stipulations with the USDA loan as well. It's not as easy, as FHA or conventional loans. It has a stricter DTI. It's 41% DTI.
Okay.
And if you have really good credit, they may go up to 43%, but it's not like the 50%.
But they're not going to know until they contact you.
Yeah, but
That's
the first
thing
step is to
don't
contact.
tell yourself. Too many people have a friends or something that says, "Oh, but you got to put down 20%. Oh, you got to have all this money."
They get scared.
It gets
Yeah.
very scary. Don't
Right.
listen to that.
No.
Call you ladies up and say, "How this is my goal. I'm committed to it. I'm passionate about it. As long as, from what I'm hearing from you, if they're committed, you've got the ability. You've got the network to bring them to that goal.
Yes.
But they've got to be committed to it also.
Yes.
And they've got to start somewhere. And this
Yes.
is where we start with
Yes.
the two of you.
Yes, and I would like to chime in because a lot of people don't understand, like, down payments and closing costs are two separate things. So a down payment is what the loan requires you to put down, and the closing cost is basically everybody you have to pay to get this loan closed.
Absolutely.
So every loan has
Right.
closing costs.
It has
Now-
money out of their pocket to get into the home.
Yes.
Because a lot of people have that misconstrued.
Right,
believe it or not.
and
I do.
some people may say, "Oh, I didn't have to pay nothing down on my house," and they may haven't. They may haven't had to pay any closing costs, but somebody had to pay that
Somebody
closing
had to
costs.
pay.
It could be the
Right.
seller, the lender, and we also offer great lender credits
We
as
do.
well to go
Good.
towards your closing costs.
And that's something to keep in mind, because we're going to talk more in the future about a home builder we represent here in Baton Rouge. It's Martell Homes. And they have programs in place to help people with down payment assistance.
Yeah.
And they can help contribute toward the closing cost. So if you're looking for a new home, we can help them with that also.
Yes.
So it just depends on which program they qualify for.
Yes, it does.
What their goals are.
It
Okay.
does.
So be disciplined, accept the discipline and the hand-holding process, accept the help, and then live up to the expectations and be passionate about it, and you can live in a home.
Yeah.
That's right.
Well, good. We will continue conversations further, and we're going to bring you customers, and we're going to bring some people new homes in Baton Rouge, Louisiana.
All
Thank
right.
you. And
Great.
abroad, hopefully.
And where?
And abroad.
And abroad. That's exactly right. Exactly right. Hello, everybody. This is Perry Thomas. As you know, I'm the growth coach